down about 1.5 to 2%. And then you have names like Infosys as well. So here's the first tick on the index. It's absolutely flat, so not doing too much at all. Nifty is up about 16 points, sensex up 30 points. In terms of individual stocks, there is Hindalco, Tech Mahindra, Coal India, Tata Steel, Power Grid that are topping the charts. By the way, those are Bajaj Auto sales, better than what Nomura was estimating. So total sales at 3.41 lakhs, but that is still a fall of 15%. Remember, last month as well, the Bajaj Auto sales were down 10%. This month as well, down 15%. Would be interested to see what the export numbers are, because that's where all the pressure has kicked in the last couple of months. So total sales for Bajaj Auto down 15% year on year. And then, of course, in the domestic market, there's that weakness in the monsoons. We'll come to that in a bit. For now, the stock is doing fine. Eicher Motors, HCL Tech, Apollo Hospitals, SBI are a couple of other stocks that do deserve mention. On the downside, though, you have NTPC, that's down about 1.5%. There is Infosys, there's HDFC Life, ICICI Bank, Maruti Suzuki and Grasim that are under pressure now as we speak. So it's flat. But the Bank Nifty once again dragging. Anything else?
Well, that's right, Sonia. In terms of stocks that are losing out, Five-Star Finance, demand we understand is quite high for that block. But that stock, in fact, is open up with a cut of around 3.5%. HDFC AMC, well, that's down close to 3.5%. IDFC First Bank as well. Some of these in the last hour of trade, they saw a sharp spike because there was an MSCI rejig that took place. But for the starters, at least, they are pulling back a little bit. Stocks that are gaining on the back of order wins. We just had a big order that was announced by NCC. So that's opened up with a gain of close to 3%. ITD Cementation. I recall interviewing the management at their office, their head office here in Mumbai. And the stock was half this price. The stock today is up close to around 8% odd. It's flying away they promised, and it appears that they delivered what the street expected. Genus Power, well, the stock is locked in upper circuit. It's up close to around 5%. Last few sessions have been good. A 2,000 crore order is what they won. The street likes that. Gujarat Gas, there's a rate increase, a price increase upwards, so that stock as well is higher. On the downside, you have Escorts. The numbers just came out, and it seems the street didn't like it too much because that one as well has pulled back a little bit. But contrary to what we saw on the Gift Nifty, it was suggesting a downtick of 40 points. Well, we're up close to 50 points, holding around 19,300. Prashant.
Okay, well, yeah, absolutely. 46 points, almost 50 points higher on the Nifty is what we have. Just a few other names in terms of specific stocks. Indiabulls Housing Finance did sell off a little bit yesterday, but is back up about 2.5%. Stocks at about 203, 204 right now. There is, ITD, Nigel mentioned, 10% now, so it's a big mover. Mazgaon Dock is up 3%, 1,900 plus. And again, very large volumes on Mazgaon Dock coming through. Jupiter Wagons is a company we had on the program yesterday. That is coming up with large volumes. It's up another 5% this morning. There is a TV18 broadcast. We were just discussing this with Abnish, the analyst, 5% higher there. Gland is a stock that Ekta put out on Momentumizer. Gland is up 2.5%, so 1785. Coming up with decent volumes here as well. Amber Enterprises, again, something which we put out earlier. I think Vivek had highlighted that 5.5% on Amber, 3,056. That's a big mover. Electra Green Tech, I think they were towards in the dying few minutes yesterday. There was some news coming through on Electra, 1.5 higher, 1266 on that one. Kalyan Jewelers went up 10% yesterday. There is some follow through. I mean, it's opening up about 2.5% higher, so worth watching this one. Network 18, along with TV18, Network 18 is the one which is up more, 7% on Network 18. At this point in time. The listing from yesterday, Aeroflex, which had a very good day, is starting about 2% higher once again. And you got names like RK Forging. RK Forging, I think, was up in double digits yesterday. It's up another 3% this morning. MedPlus, we had the company with us earlier this morning. After that block, it's up 1.5, so slow start, but higher. Supreme spiked up in the last 30 minutes of trade. Supreme Industries, that is, it's up 1% or so. So many names coming through. Atul Auto was another 10% mover yesterday. It's up another 3.5% this morning. 611. And you've got something like a Nazara Tech, which is up about 2.5% also. So that is coming up at about 796. So that's, a list of what's happening and what's going on across the board. BSC has had a fantastic one-way rise, and that's pulling back a little bit, just a tad bit, 2.5% down on BSC Limited at this point in time. Well, Nilesh Shah is joining us now. He's Managing Director at Kotak Mahindra Asset Management Company. Nilesh Bhai, good morning. Great to have you with us here. Appreciate your time as always here on CNBC-TV18. You know, we were just jokingly saying that it's almost a daily 0.5% kind of compounding for small caps. And it would be true because it is true. Our colleague Sudarshan has put out an article where he went back 20 years and looked at the divergence between small caps, actually mid caps and Nifty, and he found that we are kind of set to have the biggest outperformance for mid caps vis-a-vis Nifty going back 20 years. So just wanted to get your thoughts to begin with there. Go on.
So Prashant, when making money is so easy, you know there is a risk ahead. As of today, as we speak, micro cap and mini cap as a percentage of total market cap is higher than 2007-11. We all know what happened after 2007 highs. I think today there is a herd mentality. People are buying micro caps, mini caps based on momentum, not based on fundamentals. Now there is always exception to rule. So some of the micro caps, mini caps probably are reflecting their fundamental values. But when we look at them as a percentage of market cap, as a percentage of large cap valuation, as a percentage of their own historical average valuation, clearly there is a red signal. No one knows when the momentum ends, but everyone knows that if you buy without margin of safety, then you will have to hold these stocks for a long period of time to make money.
Okay, by the way, the market is picking up pace. So, you know, the index itself is up about 45 odd points. It's trying its best to break out of that range at the moment. Yeah.
You know, no, sorry. I just want to kind of,
Sure.
press on that point because those are very strong, clear kind of words coming in from, Nilesh. So basically saying that people are buying micro caps, mini caps based on momentum and as a percentage of, I mean, you could look at a variety of things as a percentage of overall market cap, as a percentage of large caps, as a percentage of their own historical valuations. I mean, you are at highs basically. So how are you kind of approaching the market? I mean, it's to be able to sit out while everyone around you is making money. That is perhaps the most difficult thing in investing, right?
Yes,
it is the
sure.
most difficult thing, right? So is it time to do that?
No, of course it is very, very difficult, Prashant. But I have a very simple benchmark for market behavior. When I go to party and everyone shuns me as if, I don't exist, that's the bottom of the market. And when my cousins and relatives start telling me, Nilesh bhai, ye kharid lo, tomorrow that's going to go up. And when that starts happening, I know somewhere I need to be cautious. This is the time where I will prefer caution over making money. There are enough opportunities in large and mid cap. Of course, by not going into micro cap, mini caps, we may lose some performance, but that's fine. We have clientele base who will be able to appreciate that. And our focus right now is on valuation. We want to buy real businesses, whether it's bear market or bull market, but we don't want to overpay on valuation. It obviously results into underperformance in a phase like this, but we are fine with it.
Okay, well, I don't think the time has come just yet. We also go through that, right? When in phases, when there's a lot of euphoria, then you get everyone from your driver to your watchman to your staff at home asking you what stock to buy and sell. I haven't faced that just yet, so perhaps it's not a euphoric time in the market, even in the broader markets. But Nilesh, great speaking to you. Good to see you after a while. A lot of spaces have come back after a big lull, right? Whether it is capital goods, infrastructure names, real estate. I mean, I'm seeing BHEL top the charts after so many years. How are you feeling about that? Do you think this is the start of some sort of a big Capex, multi-year Capex cycle? And if yes, are these the spaces to look at?
Undoubtedly, there is a Capex led by first central government. Now state governments have joined in the party. And private Capex led by large industrial houses is on the way up. We believe as capacity utilization starts improving, and in yesterday's first quarter GDP data, we did see some amount of recovery on private Capex. Hopefully, all this will result into some amount of revival in order book and some amount of growth ahead. The second biggest opportunity which is emerging is China plus one. Global supply chains are shifting their outsourcing, and many of the Indian companies, especially multinational subsidiaries, they are getting bigger share out of their parents' purchases. Combination of global market plus local market bodes well for capital goods and infrastructure companies. Probably from here till May 24, government will push on faster execution. They were already running at a good pace, but last 100 meters, they'll put extra effort, and that bodes well for the conversion of order into turnover and profitability for capital goods and engineering companies.
Hi Nilesh, good morning. Well, keeping my SIPs going as I always promise you. But what are you making of this PE exits? Large PE exits almost on a weekly basis, and it's being lapped up. Do you think that it's a cause to worry? Who do you think is getting a better bargain out here, or are both gaining? One has made its money, and one is playing for a longer term.
So private equity players have a fixed tenure for their fund, and they have to exit as those funds come for maturity. What will be a better day than today to exit? Now, investors who are giving exit to private equity guys, they are taking a longer term call, and they are probably picking up those stocks at valuations which they find reasonable. Do remember that not all the PEs are able to get exit. There were a couple of IPOs where they tested out the market at the valuation which they wanted, and I believe so far they have not been successful. One good discipline of this market, and where it's difficult to say it is the top of the market, is absence of a large overvalued IPO. So far, whatever IPOs have come are of reasonable quality and reasonable valuation. We haven't seen a large IPO which creates fancy euphoria at an extreme overvaluation, and hence maybe it's too early to say it is top of the market.
Got that. Maybe, I think there was that ARM, which is the microprocessor semiconductor company, which is coming up with an IPO of some $90, $100 billion. I don't know if a global IPO will do. But yeah, that's something to watch. But Nilesh, just to take you back to what you started by saying, right? I mean, absolutely take your point. Time to exercise caution rather than kind of chase momentum. I mean, don't do that. And that is absolutely sound advice. But are the fundamental underpinnings looking pretty strong? I mean, there is, so if you just step back, banking is a sector that's been sort of cleaned up. People are worrying about the next cycle, and that we don't know, but there's a big cleanup. Real estate, largely, I mean, demand is picked up, inventories getting depleted. So overall, are things looking, are the underpinnings strong? Valuation excesses can be there, but there's nothing wrong otherwise. Would you agree with that, Nilesh?
Absolutely, Prashant. This has been a fantastic convergence of growth. Our earnings growth will be superior to our peer group in emerging market. Our governance standards are far, far superior to emerging markets and comparable to developed markets. The regulatory framework, which our exchanges and SEBI kind of regulatory authorities have set up, that provides a lot of leeway to minority shareholders. And more importantly, Indian economy is transiting by a green transformation. We are the lowest per capita emitter of carbon in the world. We are on our way to meet COP26 targets, and we produce more than 20% of our energy through renewable energy. Where in the world will investor get convergence of 3G, growth, governance, and green? And to some extent, we are seeing Birbal ki kahani in our market. Our growth story was good, but others have started scoring self-goal. Russia knocked itself out of investor radar by Ukraine invasion. China is struggling with property bubble, and also their crackdown on entrepreneurship, especially technology sector. South Africa, Brazil, Turkey, they all have scored different kind of self-goals. Suddenly, the universe available for emerging market investors, everyone else is scoring self-goals and India is doing well. So we look better and brighter compared to others even more. Put together these two things, fundamentals are good, others are scoring self-goals, effectively there's not many options for an emerging market investor but to invest in India. And now I think people are convincing themselves, what's the worst case about India? I won't make any return for 6 months or 12 months. So be it. I'm here for 5 years, 10 years. I will stay invested. As the boardroom started talking about foreign direct investment in India, their pension funds are following. So we are seeing a fair amount of flow coming in from a long-term conviction, especially keeping in mind that other options are becoming dull.
And that is, I guess, one more reason why one should not unnecessarily chase momentum and then get stuck in things, and then you're trying to recover money while, you know, the rest of the market kind of moves on, right? Because that is opportunity cost.
Absolutely. Margin of safety is the principle which one should follow in this kind of market. It's better to lose some upside than to create bigger downside.
Okay, Nilesh, before we let you go, I just wanted your thoughts on some of these auto companies, right? Bajaj Auto just reported their numbers a while back. And, you know, these companies, the traditional auto guys, have been struggling for a while now. I mean, if you look at Bajaj Auto's numbers, 15% fall in overall sales, domestic sales down 20%, exports down 6%. So there's not just competition, but now competition from a lot of new emerging electric vehicle players as well. What do you do at a time like this? Since you're looking 5-10 years down the line, do you think these are companies that will continue to underperform, perhaps struggle to stay relevant? Or would you continue to back these guys?
So, Sonia, if I give an example from our industry, in the broking company, when online broking came, traditional brokers were able to adopt to online. In fact, they led online broking. But eventually, when low cost or zero cost broking came, online broking companies were not able to match it. And today, leadership has transited from traditional broking company, mom and pop shops, brick and mortar shops, to low cost, zero cost online broking company. Today, market is fearing about the same thing on the automobile sector. Will ICE makers be able to move to hybrid stroke electric vehicle or to maybe hydrogen fuel cell if that is the future? Now, every company is making an attempt, but clearly the new age companies, the startups, they have far bigger advantage because they are starting on a clean slate. The traditional companies, they are making money on their ICE business, and they have to jump to catch the electric business. In this transition, market is trying to figure out who will be the winners. Obviously, the companies which can make that transition, that will reward shareholders. Market will also increase their valuation. But we have seen that the transition is not easy. More importantly, two-wheelers per se have also been hit by uneven recovery in Indian economy. First quarter GDP numbers showed some improvement in private consumption. It is still subdued, but at least it is now turning positive into bigger territory. My feeling is that from here till election, as more money comes into the pockets of consumers through government spending, we will see demand pick up in two-wheelers. Now, this trend should have happened, but we are unfortunately seeing a deficient monsoon, which could have material impact on rural income. Now, again, we are in dilemma. Will the money in the hands of consumers ahead of election be outnumbered by deficient monsoon? So there are reasonable doubts emerging on the demand in two-wheelers in the near term and transition in the longer term from ICE to hybrid EV. These are not easy questions to answer, and which is why market is waiting and watching, and this company's valuations have been derated.
Okay, all right. We will let you go on that note. Thanks a lot for joining in. Have a great weekend and hope to speak to you at length again very soon, Nilesh. Thanks a lot for being with us. Well, let's do one thing. Let us get our focus on the auto sector now. By the way, the Nifty is back above 19,300, so 50 points in the green. M&M is one stock that has been surging now, and it's at a fresh high this morning. M&M up almost about 2%. It's been a relentless run on the upside for stocks like M&M. And once again, making its presence felt. But Bajaj Auto is the other one. The weakness continues in the month of August. The total August sales have come in with a drop of 15% at 3.41 lakh units. Nomura's estimate was 3.30 lakh units, so it's slightly better than the estimates, but it's still a steep fall. Domestic sales are down 20%, exports are under pressure as well. Exports are down almost about 6%. So let's get the management on board. Rakesh Sharma is joining in to give us a view on what's happening. Rakesh, thanks a lot for joining in. Before I ask you about exports, what's happening in the domestic market now? Because, you know, the festive season has begun with the onset of Onam. How have the festive sales been? And given the fact that there is this deficiency of monsoon, right, in the latter half, we saw almost a 33% deficiency in the rainfall in August. Do you think that could put some pressure on the domestic sales?
Good morning, Sonia. The motorcycle industry in domestic is showing steady increase. It's not rocketing up, but after, successive quarters of double-digit decline, it sort of evened off in Q1. And what we are seeing in retail terms, it's now at about 4 to 5% growth over the same period last year. We expect that this should obviously, with the festive kicking in, should probably go up to 5 to 8%. So nothing dramatic, but it's good to be in the positive zone. Now, the character of this growth is such that it's being driven by the top half of the industry, which is slightly more than the 5 to 8%. And the bottom half is sort of almost at zero.
So what does this mean in terms of domestic sales? I mean, this time domestic sales were down 20% compared to what we saw last year. And the wholesales have come in a little above 2 lakhs. On an average, what do you think domestic sales could look like over the next couple of months?
Looking at our sales numbers, it would not be right to just compare them with last year, as it was not right to compare them with last year in Q1, because, if you recall, we had a major supply chain issue in the first 3-4 months of last year. And therefore, you were seeing humongous growth in Q1. But last year, from August onwards, we had started to build up stock. So the right way to look at it is really the retail growth, which is very, very easily available on Vahan. Now, if you see the Vahan data for this year and even for August, you will see that the motorcycle industry is growing at year to date at about 4%. And our retail growth is 19%. So actually, if you go beyond just the first page, it's a very, very robust performance by the domestic motorcycles and three-wheeler business. Very robust.
Okay, Mr. Sharma, hi, good morning. Just a quick word on the poor rains we've seen in the month of August, and the forecast for September is also pretty poor. Is that going to hurt at the margin? What's the assessment?
In terms of growth, the broader economic recovery is set in motion. And the poor rains will only dampen the growth, but I don't think it will result in a decline or anything. And that's the reason why one is saying is that the retail growth outlook is probably 5 to 8%, depending on the segment. But yes, if the monsoons had been absolutely perfect, we could have probably hoped for slightly more. However, like I said, economic recovery is now reaching the pockets of our kind of customers, and we are happy about it.
Okay. I wanted to ask you, given the strong demand of the Triumph, what kind of production ramp-up can we expect in the Triumph by the end of FY24? And what is the order backlog that you're seeing for the Triumph right now? What kind of scale-up can we expect in production?
Yes, unfortunately, there is a considerable backlog. We are over 20,000 units of bookings. And last month, which is in August, our dispatches were about 3,500 units. We're going to scale it up to about 5,000 in the coming months, and then try to see if we can go up to 7,500 in the final quarter. We are taking this step by step, but because it's not just about the production, we have also started to establish an absolutely exclusive channel for Triumph, So we started with about 14 stores in July, which has now gone up to about 25, and which will now progressively go up to 50. So the other thing is that these 20,000 bookings are only from these 15 centers. And our whole attempt is to deliver a very distinctive retail experience and ownership experience to the customer. So we are taking it step by step.
Okay.
By the way, Sonia, today, I think in about half an hour, iShow will unveil their Bullet Refresh, which is under 2 lakh rupee bike. But we don't know. I mean, I don't know if there's a fresh pricing or something. But it's Mr. Lal is there in Chennai. I mean,
Yes,
you heard from him
yes.
yesterday. So yeah.
And he was talking about how he's not in a hurry to
On the EV
unveil
side.
his
EV
electric
side,
vehicle. Yeah, but it's coming. It's coming in 2025. So that market is also hotting up, right? The EV two-wheeler space. But Mr. Sharma, tell us about exports, because despite your assessment of things improving July onwards, it hasn't really panned out as expected. How is Nigeria doing at the moment? And has the recovery played through in its entirety? What is the expectation as we move along?
Well, it is improving. If you see, Q4 was 115,000 units. Q1 was 125,000 units on the average. And Q2 is running at about 140,000 units on the average. I mean, we never expected a rocket-like recovery. It's a very difficult situation in the overseas markets because of the macroeconomic factors, largely led by the volatility of the forex, which has led to inflation, availability of dollars for trade, etc. However, having said all that, there is a nice 5 to 10% recovery almost every quarter, both in retail terms and in shipment terms now. And I think that is the way it will go. I'm not expecting a sudden return to 200,000 within a quarter or so.
By the way, do you have any exposure, Mr. Sharma, since you brought up Africa, to Gabon, where we've seen a military coup recently?
No, we don't have any issues. And just to sort of complete Sonia's question, I'm sorry I did not respond on Nigeria. Nigeria is taking a little bit, Nigeria is improving by about 5% every month in terms of retail. And the stabilization of the currency is still an issue. Locally in Nigeria, it's still wobbly because they're attempting a very major thing, which is convergence of the street market with the bank, with the street rates with the bank rates, and having one window for foreign exchange clearance. There are major reforms, and they are taking a little longer to sort of play out. And so therefore the recovery is slightly less than expected. However, it is at about 5% per month. If I look at our retails in August, they were 5% better than in July, and so also in July.
And how has the feedback been for the new EV three-wheeler? Which markets have you been targeting for that, and what is the expectation?
Sonia, it's been an outstanding feedback, and we are glad that we sort of went back to the drawing board and sort of delayed our launch. And within the first 45 days, in registration terms, we have zoomed to a 56-57% share. Of course, we will not be satisfied with less than 80% because we have 80% of the three-wheeler business. And now, by end of this month, from about 2 markets in August, we will be in 18 markets by October. So the ramp-up phase is going to start in September. And the reception which we have received in the first 2 markets, if that plays out, then we would be very, very delighted by that.
So, sorry, I didn't get that. What is the ramp-up plans for the EV three-wheeler?
The ramp-up plan is that we will go from 2 cities to 18 cities now.
Okay. Okay. No, in terms of production?
We'll see how it goes. And our first objective is to establish the network, get the mechanics, this, that, everything trained up, etc. And because a lot of this business is actually conversion of those e-rickshaws, which were, which have proliferated because there was permits in the auto side and there were no permits on the e-rickshaw side. and they were really not a very lasting solution. So now, if you look at it nationally, nationally they constitute about 50%. So if ICE autos are 50,000 units, these e-rigs are 40,000 units. So I would say that over the midterm, that's the kind of business which we are shooting for.
Okay, all the best. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. That's Bajaj Auto talking about the way forward for the business. They're looking at about a 5 to 8% growth in the retail segment in the festive season. It's still going to be low single-digit growth according to them. And the bottom end, that is the mass market segment, is absolutely flat, so no great growth there. Let's step into a quick break. On the other side, Praveer Sinha of Tata Power will be joining in to talk about its pact with Sanyo Special Steel, as they will be setting up a captive solar plant. Later, we'll connect with Prashant Bindal of the Lodha Group to discuss demand trends in Mumbai's residential space. Stay tuned.
Welcome back. This is Corporate Radar. Well, the markets are holding strong. They're up close to around 70 points out. So it's been a good start to the September series. But let's get straight to a big CNBC TV18 exclusive then. Zerodha founder Nikhil Kamath is looking to up his stake in Nazara Tech. Sonia is the one who's bringing us all these details. Sonia, what are you picking up from your sources?
So it's very interesting, right? The entire gaming space is something that has picked up quite a bit, and Zerodha promoter Nikhil Kamath is interested to pick up more stake, additional stake in Nazara Tech. This is what we learned from our sources. Now, Nikhil is looking to buy a total of 3.5% stake in Nazara Tech in his personal capacity. And so far, we understand that he has bought up to 1% stake already. Talks are on to increase stake further, although the deal has not closed just yet. But over the next couple of days is when we're expecting the deal to close. Remember, Nazara Tech has a board meeting on the 4th of September, and we reached out to Nazara Tech as well. They say they don't want to comment on market speculation, but they have talked about some fundraising too. So in all likelihood, this deal will go through over the next couple of days. Now, apart from Nazara Tech, Nikhil Kamath has his sights on a couple of other gaming companies as well. The deals have not closed just yet, but the overarching theme is the growing gaming industry and the interest that he has there in his personal capacity. He's looking at a few gaming companies both in India as well as overseas. If you look at the Nazara Tech stock, right, it's had a very strong run in the last many months. So the stock is up almost 50% in the last 6 months alone. The gaming industry has been growing quite a bit. So in Q1 alone, Nazara Tech saw its revenues go up 24% in the gaming business. In the esports business, which is the next big vertical for them, which is growing, that's seen a growth of about 15.5%. Only ad tech is slowing down a bit. So, but gaming and esports are two verticals which have seen a very sharp run up. So, that's the news flow. We reached out to both parties. Nazara Tech, of course, does not want to comment on any of the speculation.
All right, big name coming into Nazara, and that explains why the stock is now moving higher as we speak on the back of that big exclusive. Just take a look at it. Spiking up. It's already gained a goodish bit, but now it's moving back to the high point of the day. Well, let's focus on Tata Power. As promised, well, the company has has partnered with Sanyo Special Steel Manufacturing to set up a 28 megawatt AC captive solar plant here in Maharashtra. To help us out with details on that and a whole host of other issues, we have Mr. Praveer Sinha, the Managing Director and Chief Executive Officer, who joins us on the show. Hi, Mr. Sinha. Good to see you, and thanks so much for joining here on CNBC TV18. Well, let's start off by talking about the Capex targeted on the charging infra. What is the return on the investment here? And what is the timeline that you've planned for increased chargers on road?
Good morning. Thank you for having me on the show. In EV charging, there are three components. First is the home charging, where we make a good margin because it's on a cost-plus basis that we do. And for providing the EV charger as well as the services, there is a fee that we charge. And that's one part of the business which is profitable. The second part of the business is the fleet charging that we do and also the bus charging. There again, it is on a cost-plus basis, and there is a good return that we get on these. The only space where the returns have not come as yet is the public charging, which is not a very large component. At present, we are having nearly 5,000 EV chargers, which are public chargers on highways and cities. That's where the utilization factor is still very low. It's about 2%. We do expect now that the range anxiety which people used to have is no more there, and people are now seeing that you have charger availabilities even on highways, even in different cities. So I do get a lot of calls saying that, yes, we went to this place, and people travel from Delhi to Chandigarh or Delhi to Jammu or Delhi to Nainital or Dehradun, and they get chargers right across, also in south and west of India. So I think out of the 500 highways, we are there on nearly 350 plus highways. So I think once the charger utilization increases and the penetration of electric vehicle increases, we'll start making returns on that. But this is an area where we have to be present to ensure that the whole EV ecosystem becomes very strong.
Mr. Sinha, good morning. You know, it's a long-term story, right? I mean, electric vehicles, electrification of automobiles. How large can this business be for Tata Power? Can this be a very meaningful business? Very large in size. I mean, any broad numbers you can share with us, sir?
See, now you need to look at it not as standalone businesses in silos, but also in the energy services business, which Tata Power is working on. And we now provide end-to-end customer solutions, which is rooftop solar, energy management, energy services as such, EV charging, distribution services. So I think we need to look at it that in totality, I'm supplying and servicing the consumer for their total electrification requirement. And this is a very, very important component when we talk about decentralized generation and decentralized usage of energy by the consumers. So I think we need to look at it and how each one of them will hold the other and thereby build the stickiness in the business. And that's what is important. So you need to look at it in totality rather than looking at them as a piecemeal service.
So in totality, how large can this business be? Energy services, as you called it.
So like today, we have 50,000 home chargers. I expect in next 5 years, this will become more than 500,000 home chargers. Similarly, there are now 7 cities in which we have EV charging for buses. It's increasing tremendously. Now, recently, the bid for 5,000 buses in different cities have been found that we are virtually doing everywhere. It's in Srinagar, it's in Jammu, it's in Calcutta, it's in Delhi. So every city now is going for EV buses, and this is becoming a reality with the support from the government. So I think this is a huge business which will grow in the next couple of years with more and more EV penetration that will happen. Similarly, battery swapping is becoming a very large business. And for both 2 and 3-wheelers, we are working with many of the OEMs to see that how these battery swapping stations takes place, and we provide them the support in terms of the EV charging infrastructure. So I think the market has just started its tip of the iceberg, but going forward, this will be a huge business for Tata Power.
All right, Mr. Sinha, so we got that out of the way. Let's focus on the renewable energy part of your business. What kind of addition are you looking at in the renewable energy vertical? Could it be what, 2 gigawatts per year? What kind of capex will you have? And ultimately, what are the returns you see out there?
So right now we have 4 gigawatt of existing operational assets of renewable, nearly 3 gigawatt of solar and 1 of wind. We have a pipeline of nearly 4 gigawatt, which is there. Some of it is, of course, third-party EPC, but nearly 2 gigawatt is our own in-house projects, which we develop as utility scale. What we are seeing is that there is a huge push on group captive projects, and large number of industries are coming forward. A few months back, we signed the agreement with Tata Steel for nearly 1,000 megawatt of hybrid project. We have since then signed with many industries in the country, and there are many in the pipeline. And we expect that every year we will be adding about 2 to 2.5 gigawatt of capacity, either through the group captive route or through the utility scale. So I think we'll have a very good portfolio mix of these type of projects. And this year we have a Capex plan of nearly 8,000 crores in renewable out of the total 12,000 crores in Tata Power. So I think we are all geared up for the growth that we are looking. But yes, we have always been conscious that our growth will be very, very calibrated so that the type of returns that we expect comes from a mix of both utility scale as well as the group captive projects.
Okay, so utilities and group captive projects, it'll be a mix of that. But can you tell us in general, how is the power demand trending like in FY24? What kind of growth are you looking at? And what is the, blended PLFs at the moment? And what is the expectation as we move along?
So last 1 month, I would say that the power demand has gone up, which we were at around 215 to 220 gigawatt, is now 230 gigawatt plus. In fact, last few days, it has gone to 234 and 235 gigawatt. So there is a huge demand. The monsoons have got the second phase of the monsoon is going slow. And because of that, there is a lot of humidity and a lot of requirement of power that we see. We expect that if the monsoon does not improve, then this demand will definitely continue up to end October. You can see the exchange prices also going up. In fact, both in morning and evening, it is peaking at 10 rupees. So I think there is a very good demand. Overall, we saw in the earlier months, we didn't have that sort of demand, but now it has picked up. And I do expect a 5 to 6% growth on an annualized basis.
Mr. Sinha, is this what we're seeing over the last couple of weeks, peak deficits, etc., demand at all-time highs? Is there also a one-off-ish kind of element? I understand there was a nuclear power plant which was undergoing maintenance, etc. Once that is back on stream, that perhaps will, or is this more structural? I mean, you see this, staying like this, very high demand, because on the thermal side, not very much capacity has come on stream. New capacity has come on stream over the last many years now. We recently heard NTPC coming up with an announcement to invest 15,000 crores into a large thermal power plant. So just wanted your thoughts there.
This is a demand growth that we have seen. Last year, the demand growth was nearly 10%. So prior to that, we were somewhere at the peak demand of 180 gigawatt. Last year, we came to 210. And this year we are at 230 plus. So I think the demand growth has been there. Basically, we have seen that there is a huge consumption right across, whether it is in industries, commercial or residential. And with the weather sometimes not being as predicted, the demand goes up because there is more of agriculture requirement as well as the commercial and the residential requirement. So I think the demand is going to stay over here. It is only going to increase. A lot of capacity additions, especially in the renewable, which got delayed last year because of the supply challenges from China. I think this year it is sorted out, and you will see that in next 12 to 18 months, a lot of capacity addition will happen in the renewable space. Some of the other areas of the conventional generation, has been going slow because as a country, we took a stand that we will be 500 gigawatt by 2030, 300 capacity has to be added in next 7 years. So I think there is a whole lot of action that is taking place, both by the industry as well as by the government and regulatory system. And we'll start seeing good results in next 12 to 18 months.
All right, we'll leave it at that, sir. Thanks a lot for joining in and have a great weekend. Thanks for joining us. That's Tata Power. By the way, let's move on to the real estate space because there's lots happening there as well. Mumbai has recorded over 10,550 property registrations in the month of August. This was the decadal best number which the city has witnessed, and it's a 22% increase on a year-on-year basis and a 3% increase on a month-on-month basis. Who's buying all these flats? Let's find out more. To discuss demand trends, Prashant Bindal, the Chief Sales Officer at Lodha, joins us now. Prashant, thanks a lot for joining us. You know, it's clearly heydays for the real estate sector, right? But I just want to understand from you, in the Mumbai market, you have, you know, there are, of course, premium properties, there are regular ones as well. Which ones are selling more? And what is the trend looking like over the next 12 to 18 months?
You see, if you see, Sonia, the structural change that happened in real estate industry, we have been observing for last 10 quarters. And every month of every year is always the best year. That is how it has been happening. So the trends are, you see, and it is reflected in the sense that the growth is happening across the segments, whether it's affordable, the aspirational, the premium, as well as even in luxury. You know, in Bombay context, the affordable segment is up to crore. The aspirational segment from 1 crore to 3 crore, and premium is 3 crore to 15 crores, and luxury 15 crore and above. In all those segments, the growth is almost similar. Yes, it has been led more by the aspirational segment. The 1 crore to 3 crore segment is doing well, but the premium and you know, it is the continuation of what we have seen in last three odd years or 10 quarters, and we believe that will continue to happen because the growth is more structural, because when it happens all across geographies and across price segments, barring the 50 lakh and below segment. I think the growth is across the segments.
Growth across the segments. Interesting. Hi, Prashant. Good morning. Nigel on this side. Well, will Q2 be better than Q1? And also, if you could tell us, have you managed to push through any kind of price increases? If yes, what is the quantum? Are you waiting for the coming quarter?
You see, Q2 generally for Bombay, because of the rains, is generally the worst quarter. You know, first half, how Bombay behaves is that 40% is in first half and 60% second half. But the way things are going, it is becoming more and more, consistent. And we believe that Q2 becoming equal to Q1 is something unheard of, at least historically. But that is how the trends are moving because the growth is across. In terms of price increase, we have a very stated policy that we take price increase twice. Once in April and once post Diwali. So we took the price increase post in the month of April, and if you see that we growing at almost 20% odd, so 5% of that is driven by the price increase.
Okay.
So if you look at the price increase as compared to the quarter last year, we are trending at about 5% increase.
You also spoke about, several large infrastructure improvements that are happening in that Navi Mumbai area, right? Whether it's the Upper Thane area as well. In Panvel too, there's lots happening. Can you tell us what is the expansion plan that you would be looking at there, and what is the opportunity size as well?
Opportunity size is huge. See, for example, that is one segment where we have, of course, a lot of land parcel, and we can continue to build it for years and years. And in terms of as the infrastructure develops, the opportunity there is, say, for example, as people move towards the bigger units, the more township segments, one trend that is also visible for in Bombay market is that people have moved away from earlier 70 to 80% of the business used to happen from 3 to 5 kilometers of the segment. As the infrastructure improves, the consumers are ready to move to bigger amenities, better places, if it is even at a certain distance because of the infrastructure development. And as the infrastructure develops, we believe that customers from ahead of 5 kilometer and 7 kilometer segment also start moving. And that gives it's a huge momentum to the overall business. So next 2 to 3 years are going to be very, very exciting in this external segment, the Navi Mumbai segment, where all the infrastructure development is happening.
All right. You also have a facility management business which gives you annuity income. What's the current size of this? I believe that you want to scale this up closer to around that 400-500 crores by 2030. But in the near term, how do you see that scaling up?
No, we hope to reach that business by 400 to 500 crores by the end of this year. In next out of the 14,500 crore guidance that we have given, we expect to deliver about 500 crore from that segment. And we believe that it will continue to grow. And by 2030, in next 7 years, we hope that it will increase at a much faster rate. And we hope to be about 2,500 crore business by that time.
All right, we'll leave it at that. Thanks a lot for joining in. We'll slip into a quick break. The market has fallen from the day's highs quite a bit, actually. The Nifty Bank is down almost 0.5% from the day's highs. The Nifty has fallen from the day's highs as well. So not looking like a great start. Just look at that sudden slide in the last 10-15 minutes. In fact, on the other side of the break, Mitesh Thakkar will join in for some technical trades. Stay tuned. Welcome back to Bazaar. Well, let's get a quick handle on what's happening in the world of commodities. But before that, let's also talk about the technicals of the market, because the market has cooled off quite a bit. In fact, the Bank Nifty is down about 150 odd points. Mitesh is back with us. Mitesh, this is the pain point for the market, right? The Bank Nifty, it's down over 3% in the last 1 month, and now there's further pressure. Is that the law of the land now for the next few days? And what are the stocks that you're looking at?
The underperformance, the Bank Nifty has not been able to reverse it. We did get a couple of days of, signals on the intraday chart that it could try and attempt to reverse this underperformance. But I think the Bank Nifty is heading towards 43, 400, 500 zone. Very strong support area. But if that breaks, then I would really want to go aggressive on the short side of the Bank Nifty and even banking stocks. So for the timing, while we haven't been trading the Bank Nifty, I think the outperformance will come from the Nifty IT. So that's where the focus should be, and Nifty metals to a certain extent. I think metals are buzzing today. I have, in fact, one stock each from the sector. Sale is a buy for me with a stop below 91 for targets of 100. And Tech Mahindra, I think that's also looking stronger. It's a conditional buy. Wait for the stock to start trading above levels of 1220. Buy then with a stop at about 1206 and target of around 1250 can be looked.
All right, thanks a lot, Mitesh, for that. Well, let's go across to Manisha Gupta. She's going to talk about the commodity markets now. Manisha, what are you looking at?
Well, there are just two things to watch out for, Sonia. One is monsoon, another is crude oil prices. So crude is what I'm looking at right now. We're trading at around 3-week highs and very close to 9-month highs as well in the international markets there. $87 and above is what we are trading at. And if it goes to 88, then we are at a 9-month highs in case of the Brent crude prices there. It's a 6th trade day of trade and we are headed for a weekly gain as well. But prices are up 5% in this week. And for the month of August, it's the last day of the month. We are up by nearly 6% right now. Of course, we have a couple of time zones to go. And more importantly, you have the US non-farm payroll data coming in today. And the markets will take cues from that as well. As of now, the latest reason for support really is the kind of rhetoric that we've seen from the OPEC and allies. Saudi Arabia, for one, says that they would roll out the 1 million barrel per day cut for a third straight month in the month of October as well. Russia has been saying a similar thing as well. They have not given a quantum of what their cuts are going to be, but this is what has been supportive. It clearly has been about OPEC and allies, the kind of gains that you have seen for the month of August, the output cuts, the kind of rhetoric that they have been putting out in sense of supply and demand has been supportive. Also supportive has been the US crude stocks, which we have seen decline by 10.6 million barrels versus an estimate of 3.3 million. The markets also are looking at the US dollar index, which is down by 0.5% in this week. It also is about the weak US economic data and the expectation that the US may not hike interest rates going forward for the month of September. China, the numbers that have come in today, the Capex PMI numbers are at 51, which is much better. And with this, you've seen rise in output cost, input, new employment numbers coming in and factory activity as well. So that has been supportive. There have been concerns clearly from Chinese demand. So with those numbers coming in and with the kind of China stimulus measures that we have seen, China Bank also suggested that they would be unblocking a lot of restrictions when it comes to private companies, and that could take the prices higher. As I said, it's all going to be about the US non-farm payroll data today. And before we start with the weekend, it could be quite choppy when we see those numbers.
Okay, thanks a lot, Manisha, for that. Well, let's take a quick break. On the other side, our special segment, Indianomics, Lata will get chatting with a host of experts to discuss the Q1 GDP print, which comes in at 7.8%. Stay tuned.
Welcome to Indianomics. The 7.8% April-June GDP growth was just a little lower than Reserve Bank's forecast of 8%. Strong showing came from construction, that was up 7.9%, as you can see, and the financial sector, which grew by 12.2%. Looking at GDP from the expenditure side, private final consumption expenditure grew 5.9%. Well, inherently, it could have been better, but it's better than the 2.8% that it clocked in Q4. Gross fixed capital formation was up 7.9%. Very good, even though it may be lower than Q4. And several previous quarters, capital formation has been much better. But 7.9 is a good number. Now, the big negative. The big negative is the overall slower trajectory of growth that the economy seems to have slid into. For example, let me just give you one example now and then go to the guests. The total output that we got from a big segment called trade, hotels, transport, communication and broadcasting was 6.49 trillion rupees in the quarter, April-June quarter 23. And the same segment had an output of 6.6 trillion rupees 4 years ago. So it's static. Therefore, how good is this 7.8% growth? And more importantly, what's the outlook for GDP for the rest of the year? I have with me an elite panel, Soumya Ghosh, the Chief Economist from SBI, Pranjul Bhandari, Chief Economist from HSBC India, and A. Prasanna, the Chief Economist from ISEC, the Primary Dealer Unit. Gentlemen, and Pranjul, thank you very much indeed for joining me. Soumya, let me start with you. 7.8 inherently looks like a good number, though it has a lot of story to it. Tell us, what are the strengths you take away from this number?
Yeah, thank you, Lata. I think there are a couple of strengths which I'll mention. I think if you look into the core GVA growth, which is basically an indicator of the private demand, that has expanded at 8.7%, which was 7.3% earlier. So that's point number one. The second point that if you look at the seasonally adjusted first quarter growth starting from the last decade, it is actually the highest in the last 10 years. So that means that there is a momentum even in terms of the seasonal adjustment. The other good thing is that the both private final consumption expenditure and investment has actually expanded at rates even with a very high base of the corresponding first quarter of previous year. And the final thing is that I think overall the numbers looks good, but I think there are certain disappointments which we can discuss if the time permits.
Okay. Okay, let me just begin with that for you, Pranjul. You know, one negative which I thought, the Q4 output was 43 trillion rupees. Now at 40 trillion, we are a good 7 to 8% lower than Q4. Now, pre-COVID, Q1, of course, was always lower than Q4. It's a monsoon month, it's slack season. But it used to be 2 to 4% lower. 7 to 8 means the economy is still slow. Would you say?
Lata, you know, I think the 7.8% number really has to be put in context. I think what we saw in this quarter is a lot of statistical issues showing up in the GDP print. One is the base effect. Since the pandemic, the June quarter has been depressed. So there was this low base effect that bumped up the numbers. And then there were all kinds of deflator issues, both for the manufacturing sector and the services sector. You know, it's a quarter in which commodity prices have fallen. And because the CSO does single deflation rather than double deflation, our sense is that manufacturing growth was overstated to some extent. Similarly, with services, our services deflator has too much of goods in it. It should not have so much of goods in it. And our sense is that because goods prices fell in this quarter, again, service growth was overestimated. Together, our sense is that the deflator issues have overstated growth by about 1 percentage points and the low base by probably another 1 basis points. So overall, I think growth was closer to about 6%. Which is same as last quarter. You know, the 7.8% number is a bit of an exaggeration. The true growth on the ground is closer to about 6%, which I think in its own is a decent number for now, given all the global headwinds that we are facing.
Certainly, no taking away from the fact that we are doing better than others. But the question we have to ask ourselves is, are we doing as well as we did pre-COVID? And in some cases, you know, that doesn't seem to be the case. And I was pointing out to trade, hotels, transport, which is clearly a sector that has not come back. Just to elaborate, Pranjul, making the point about the first quarter, in 2020, the first quarter was like minus 26%, if you remember, the lockdown quarter. And therefore, quarter over quarter, we are, there is this base confusion that keeps coming, which is what Pranjul explained very nicely. Prasanna, I mean, we were also worried about private consumption not being very good in the fourth quarter. That seems to have picked up now. So can we take that as a strength?
Well, Lata, I mean, at face value, you can take it. If you use the same data to feel that it's not doing well last quarter, I guess it's an evidence that it's doing well this quarter. But then the GDP data, clearly, I mean, you've been covering this for so long. It's not very complete or accurate kind of representation. GVA is, I think, more realistic. GDP, a lot of it is estimated or imputed. And I think, like Pranjul was mentioning, there are other issues. I think the deflator issue is a big issue. So broadly, maybe better to look at nominal growth. What I find is both on GVA side and GDP side, net, what I find is that nominal growth has slowed down from the second half of last year. But most of that slowdown has happened because of inflation coming off, especially the wholesale price inflation. And that has boosted the real growth. So I think if I had to sum it up, that's a story I would look at. And of course, because the deflator is so heavily weighted towards wholesale price inflation, I think there is this kind of distortion which has happened in terms of real data. But I look broadly at the nominal data. I think we can conclude that the nominal spending has slowed down.
Okay. What about the gross fixed capital formation? It's been an excellent number. The bar chart will come up for our viewers. It's been very strong, and even 7.9, though lower than all the last 4 quarters. Do you think, Prasanna, at least we are building things for a pickup later?
So there again, I think if you look at the government spending on Capex, both the central and states, I think the growth rate was very, very strong in the first quarter, I think. I mean, center's numbers have always been quite good last few years. Last year, state governments didn't spend so much, but this year they've started very strongly on the Capex front. So once I take that into account, and then I try to see try to derive how much the private sector would have spent, it still looks like the private sector Capex is not picking up. I think so that is still a bit of a worry. But of course, I think the whole idea is as government, both central and state, they keep spending, it can start crowding in some private investment also. And we know from RBI data that capacity utilization is fairly high. So over a period of time, the private Capex should also start kicking in.
Okay, so that would definitely count as a positive if the government sector is able to pull in private sector. Shaumya, your thoughts on Capex and consumption?
See, Lata, there are 2 points regarding the Capex. I think Capex has continued to be very strong. If you look into the order book position of all these different segments, I think that is now at the highest level of around 7.7 trillion. And the credit growth continues to remain strong, even after accounting for the merger. If you look into the data which came out yesterday in terms of the credit growth also, there has continued to be a bulge. So therefore, the 8% data suggests that the capital expenditure is strong, and there is early evidence of private investment kicking in if you actually look into the bank credit. But in terms of the consumption also, even though it has been strong, we have to be a little bit cautious because we must remember that in the first quarter, there was also a consumption uptick in terms of an, as you know, that the 2,000 rupee notes actually were taken back into the system. So a large part of the notes came back into the system, and possibly that could also have led to some amount of uptick on consumption. So the second quarter needs to be, so the July to September consumption numbers need to be looked juxtaposed against the first quarter number. And if it continues at this rate, I think then consumption has possibly picked up. So this has to be taken into consideration.
Okay. Actually, on credit growth, I'm going to quote an HSBC report, and since Pranjul is there, the July credit growth is 20% because of HDFC merger. If you take away HDFC merger, the growth, as HSBC correctly calculates, is 14.2% or thereabouts. Actually, credit growth has slowed. And the other number that came out yesterday was the fiscal numbers. Income tax for July is 2,000 crores less than what it was in July of 2022. I mean, direct income tax is lower. Overall tax, GTR, gross tax revenue, is only 2.8% higher. The budget estimate is 10.5%. So, Pranjul, I mean, income is slowing. Seems to be these two indications, two separate indicators.
Yes, Lata, I find the tax number extremely interesting. There are many takeaways from that. what we are seeing from the last couple of months is indirect tax growth has been extremely strong, but direct tax growth, which is income tax and corporate tax, has been quite weak. And I think that points towards a K-shaped recovery. Now, what indirect taxes hold is GST. GST is doing very well, but one of the reasons is that some of the high-priced luxury goods are taxed at a very high rate, for which the demand is still very strong, and that is keeping the GST numbers extremely strong. On the other hand, we are seeing corporate tax data to be quite weak. It doesn't really match up with some of the corporate results we have. And my sense is that the organized sector, the formal sector, has been stronger than the informal sector. And I also see a urban-rural mismatch here in the sense that we are seeing some companies which are rural-focused have seen better profit margin because, costs and commodity prices have come down. But we are seeing they are suffering from low volume growth because rural is very weak. And that is keeping corporate tax collection weak. Even though we are seeing high GST collections. So this is an economy with a lot of different parts to it. Some parts continue to do well. I think the upper end of urban India continues to do well, but rural India has begun to struggle, and we are seeing signs of that in a lot of the tax data that we track.
I take your point entirely, Pranjul. The corporate tax could be lower because corporates are anticipating. After all, it's an advanced tax estimate. So I can take that. But if direct income tax falls, that is that is tax deducted at source. If that falls, then I would worry a little. So it looks like the IT sector is responsible for it. I don't know. But Soumya, we have to get into a break. So let's start. Let's have something positive in terms of what came from the core sector. Something is working. Core sector at 8%, 8.3% the previous month. Is that something we can cling on as very positive?
Yeah, Lata. Just one clarification to the income tax data which you are saying. Yes, income tax, but you need to remember there is a refund element. So if you look into the income tax data, adjust it over the month. July is also the month when you file returns and refunds start to kick in. So that could be one of the factors which is explaining the negative growth. And in terms of the bank credit also, which you said, I think even if you strip out the HDFC at 15%, actually our estimates were around 15%, that is still higher than the trend growth that happened last year. Having said that, yes, in terms of the positives, I think the core sector growth at 8% is fine because in the first quarter, I think the electricity sector did not perform well. And given that we have an erratic monsoon so far, and I think that could be actually a point of concern going ahead. If September rains, even if September rains are normal, we could be looking at a monsoon deficiency in excess of 10%. So that could be a matter of concern. But the good thing is that this could have a ripple effect on electricity, and possibly that is one of the reasons why the core sector has done quite well in the last month.
Okay. Well, gentlemen, and Pranjul, I have two other very important questions for you. What happens hereafter? Will RBI have to revise down its forecast, given that the first quarter has not come up to its own forecast, and there is the unexpected El Nino impact, and possibly more global slowdown because it was not there? Maybe it will be backloaded this year. All those questions after the break. Bazaar viewers, thank you for watching. You will get to hear the entire show after market hours. For the moment, for you, it's Chartbusters.